Hey, what's going on? My name is Andrew Gaines, and we're the Executive Marketing Director here with Nobility. And back to back MVP team. Very excited that you're here on this educational video with us. What we're going to be going over today is the hustle, the front and the back side of the hustle, as well as how to be able to go into a field training and how to be able to land a field training to close for $1 commitment on a policy or a product, and to be able to invite them back to the office. So as you watch this, the first time you watch this, I just want you to watch it all the way through. Have a notepad and pen, take some very basic notes. If you can, I would challenge you to figure out what's the outline. Not word for word, not what are the questions. The first thing is just watch it once and figure out what the outline is. Just absorb it, watch it, jot down what do you think the outline is. Then when you go back, you can fill in your outline with questions. What are the key questions that I ask in key areas? What is the same every single time? Because what will happen is if you go and you learn this presentation and you master your craft, you're going to go in the field and you're going to find, you're going to find clients who need help. You're going to find business partners that want to come aboard. You're going to start go out there and make 10 grand in a month, 20 grand a month, 30 grand a month, 45 grand a month. All those things are going to happen for you as well, and you're going to find yourself qualifying for Cancun, qualifying for Tahiti, Bora Bora, going to all the places you want to go. All that stuff that you fantasize about, it's going to be yours if you learn this presentation and if you master your craft. And it's not about the quality of your presentation, it's about the quality of your questions. And so the better questions you ask in an appointment, the better you're going to be able to drill down and find the pain points and find what's really going to solve that person's problem. And at the end of the day, our goal is not to sell a product, our goal is to solve a problem. And if you can get really good at identifying what somebody's problem is and help them solve it, you'll find you'll be very, very successful at it. So we're going to jump in today. We're sitting with a married couple here. They're both in their early 30s and make household about $100,000. He works for the city, makes about $80,000 a year. She works at a salon, makes about $25,000 a year. They have 2 kids. So she works in the salon, very much on the side, kind of handles the kids and makes sure the house keeps running and those kinds of things. So we're going to jump in and we're going to rock through the hustle. Here we go. Hey, Joe, great to meet you.
Great to meet you
awesome.
as well.
And Becky, great to meet you as well. So tell me, how'd you guys get introduced to our company?
Through Jermaine.
Jermaine, and how do you know Jermaine?
We actually went to high school together.
No kidding.
Yeah.
Did you guys play sports?
We played football together.
Okay, who was more competitive?
We were both pretty competitive.
Yeah?
I was a quarterback, he was a wide receiver. We were pretty good together.
Very cool. And Becky, you work as a hairstylist, huh? That's cool. And how long have you guys been together?
About 10 years.
Okay.
10 years.
And 2 kids?
Yes.
Congrats.
Yes.
Family's a big deal.
Yeah.
That's cool. So how long you been working? Where do you work right now?
I work at the state.
And how long you been doing that?
About 9 years.
No kidding.
Yeah.
Is that kind of what you always saw yourself wanting to do, or is that something you just kind of fell into?
The opportunity came up. I wasn't really sure what I wanted to do after college. Someone recommended me to go to the state and, just...
And you've been there?
Yeah.
Do you see yourself staying like the next 10, 20, 30, 40 years, making a full career out of it, or like you've thought about doing something different?
I haven't really thought about it. I mean, we're pretty comfortable, and state has good benefits, of course.
Sure.
So I haven't really thought about it too much.
Got it. What do you like most about your job?
It's simple. I get great benefits. It's stable. Pretty consistent. Allows her to stay home and work and still have the hair salon on the side.
Yeah. And so, if you could change anything about what you do, what would you want to change?
I think more time with my kids.
Really?
Yeah.
Time's important.
Yeah, my daughter's 5 and 7. So,
okay.
They're a lot of fun, but I would definitely want to be able to spend more time with them.
Life goes fast.
It does.
That's cool.
They're smart too.
And have you guys talked about kind of your dreams and goals? Like if you could design your ideal life, if I gave you a magic wand, what would you like your ideal life to look like?
We probably like to be able to travel. Travel more than we're doing now, maybe out of the country. We do local stuff, camping with our kids, but we'd want to go to like Japan, tour Europe. We'd like to buy a house. We rent right now.
Okay.
But we'd like to buy a house and, settle down.
Got it.
Yeah.
Kids, school, house, travel, the whole 9.
Yeah. I would want my kids to be able to go to private college, private school, private high school.
Sure.
Right now they're in public. But yeah.
So it sounds like family's super important to you guys.
Yes.
Top priority, and being able to build a life around the family and really being able to build a life that you want. You guys do well for yourselves. That's great. I applaud you guys. When it comes down to those dreams and goals, have you ever talked about or thought through how much money you'd need to make in order to be able to really live that life where you're traveling a couple times a year, you get to see Japan, you get to go to Europe, live in the house you want, drive the cars you want, kids go to the schools you want, you're not worried about money, you're still doing the stuff you want to do. What monthly, what do you got to make to pull that off, realistically?
I mean, to be honest, we really haven't even thought about it.
Got it.
But definitely more than we're making now.
More than you're making now.
Yeah.
Got it. Well, listen, I sit down with a lot of couples, and a lot of times, you know, maybe they're making their 50 grand, 100 grand, 150 grand a year, and whatever they're making, they've hit that kind of lifestyle, but they want to live another lifestyle, but they don't have a plan to go get it. If you really were to hone in and figure out how much extra you'd need every month, outside of what you're making, how much extra would you need to make to live the lifestyle you want?
I mean, we could probably do that with an extra $5,000-$10,000.
Okay, cool. And do you guys currently have a plan of how you're going to go make an extra 5 to 10 grand a month?
I mean, maybe if she were to do more with the hair salon, but right now, no.
Okay.
No.
Got it. Well, let me ask you this. In terms of dreams, goals, ideal life, if you had to choose between staying at your current jobs and your current configuration of jobs and living your current life, or really going after your ideal life where your kids wouldn't just read about the Colosseum in history class, they get to go see the Colosseum, where you get to go travel Europe and make some of those memories together as a family. So, you know, when you guys are grandparents and your kids are looking back, there's a whole album full of pictures of mom and dad took us here and there, and creating those memories. If you were to have to decide between staying at your current jobs and living your current life, or really going after your ideal life, making that extra money to go do that, what would you pick? Your current job or your ideal life?
Ideal life.
Yeah?
Yeah.
Yeah. I think a lot of times we go after our ideal life, we have no clue how to. No one's ever showed us how to do that. Let me ask you, if I were able to show you a way today, I mean, obviously I'm going to show you what Jermaine does and how we help families, but if I were able to show you guys a way to make that extra $5,000, $10,000 a month that your job's never going to pay you, is making that additional income something you'd be open to if it gave you your ideal life?
Absolutely. 100%.
Okay. Well, I could take this presentation, more of a conversation, one of two different ways. I could either talk to you more about the services we offer and how we help families save for retirement, get better life insurance, and really the financial plan that the wealthy learn that we never learn. I could talk to you about that piece of it. Or I could more talk to you about how we help people make more money, the career side. What would be of more value, showing you how we make more money in the career or the products and services to help clients?
I mean, probably both.
Okay.
But definitely the career side.
Awesome.
But if we could do both.
Yeah, we'll talk about all of it. I'll tell you before we get started a little bit about me. So I was told all growing up to go to school, get good grades, get a good job. You probably heard the same thing.
Yeah.
I did that. I went and got the bachelor's, got the master's, and when I went to corporate America to go get, you know, a six-figure salary job, I found out what the word overqualified meant.
Wow.
Because with a master's, they didn't want to hire me. And I found out the hard way my mother's the only person who thinks I'm special.
Yeah.
So I had to go do something different, and I got into the nonprofit world. I loved being in nonprofit because it allowed me to have an impact. I was helping people. I was doing fundraising. The challenge was the income. The nonprofit is not profitable.
Yeah.
So I was getting rented for $20, $25 an hour, and it was enough to get my family by, but not enough to get us ahead. And a lot of the dreams and goals that my family had, I had those same ones as well. My father, he lost a lot of money in the market crash of 08, 09.
Wow.
He was 70 years old, and when you lose a lot of money in the stock market crash, your retirement looks very different.
Yeah.
And so at 70, he and my mom weren't able to retire, and I knew that it was going to be on me to take care of my parents. And I was looking for other careers, other avenues, and I had seen a lot of different careers and things like that. A lot of my friends were doing things on the side, part-time here or there, and I didn't want to do any kind of like lotion potion juice company. I didn't want to just be in some kind of like sales. I had seen a lot of that. I didn't want to do Uber and Lyft. I didn't want to become a part-time barista at Starbucks. There was a lot I didn't want to do, but I had a big dream of where I wanted to go.
Yeah.
And one day, a friend of mine, he was a financial advisor at a bank. He called me, and he was leaving the bank, and he was opening up his own office with our company, PHP, People Helping People. And he called me, and he just said, "Hey, Andrew, have you ever thought about doing something different than your current job?" And I said all the time, "Have you guys ever thought about doing something different?"
Yeah.
We think about it, we never make moves on it. And I told him that I was ready to make a move. And so I got started in this business part-time. And, after a couple years, I had replaced my job's full-time income part-time and then left my job. I was able to get that freedom piece taken care of and We went and crossed over a six-figure income, multiple six-figure income, and now my wife and I, we travel the world 3, 4, 5 times a year. We were in Jamaica for a week in February. We were in Hawaii for a week in January. We went to Sylvester Stallone's place in December. We're going to Cancun next month, and we're going to Bora Bora in next year. And so this industry has paid for my wife and I to do it. We're not paying for that. They pay for that. And so the lifestyle that different industries provide is amazing. The woman who's working at 1 a.m. as a server at Denny's and the person who's working at 1 a.m. as a brain surgeon, they're both working at the same time in the middle of the night, but they make very different incomes because of their industry. Yeah. So I was fortunate enough to be introduced to a different industry that would give me the income that I wanted while still being able to have the impact that I wanted to have. And so that's a little bit about me, and I just feel very blessed. But I'm excited to be able to sit down today with you and share with you what it is that Jermaine's doing. Yeah. And as I walk through this, I really want you to view this information through 3 different lenses or 3 different sets of eyes. Okay. And the first lens is that Jermaine's in training. So he's going to be taking a lot of notes. So I'm talking and he's taking notes because I'm training him how to talk about this stuff. So at some point he can go and he can talk about it on his own without me being there. So he's going to go skydiving without a parachute. Okay. Right? The more questions you ask, the better. Whether they're open, whether they're closed, maybe you're more an optimistic or a pessimistic person, whatever the spectrum is, you be you, because at some point, he's going to sit down with someone all across the spectrum. And wherever they're coming at him from, that's what he's going to have to learn how to have a conversation with. So the more questions you ask, the more he learns. Sound good? Yeah, sounds good. Second thing to keep in mind is I'm going to cover a lot of what we do in terms of the client side. Now, today is not a sales presentation. There's nothing for you to buy. With that being said, 7 out of 10 times when I cover this information with families, no one's ever talked to them about personal finance. No one's ever talked to them about making a plan for how to really get ahead. And so 7 out of 10 times the stuff that I talk to relates to the person I'm speaking with. If the stuff that I'm talking about becomes relevant for you guys, just let me know, because maybe some of these things will be implementable for you and you really can get ahead. If you could have a better plan than you currently have and you didn't have to pay for that, would that be something to be of value to you guys? Yeah. Everyone wants to get ahead, of course. So you can keep that piece in mind, but as you look at it, I really want you to be thinking about the people you know this could benefit. Okay. In school, we never learn about finance, do we? No, not at all. We take algebra, geometry, but when was the last time you measured the circumference of your Super Bowl? Never. Never was valuable. No. But at some point, we're going to have to retire, and every year we pay taxes. Yeah. So I'd love for you, as I'm going through this, names and faces are going to pop to your mind of conversations you've had. I want you to feel confident sending those referrals to Jermaine when we're done. Okay. You good with that? Yeah. If you're impressed, are you okay supporting him with referrals? Absolutely. Awesome. We'll talk about that piece. Lastly, our company's expanding like crazy. We've grown like crazy, and I'll tell you the story of our company here in a minute. But we're opening offices all over, and if there's anybody you know who's working 50 more hours a week and they're not making $150,000 a year, those would make great referrals for our office, because I'm looking for people who are doing okay, but they want to do great. And they're working 50 hours a week, but they're not making $150,000 plus a year, and they want to. And we have positions for that we train into. So referrals go to Jermaine, training, and maybe it's value for you guys as well. Does that sound good? Sounds great. Awesome. I'm excited. Well, let me ask you this piece. In terms of the financial industry, when it comes to personal finance, what's been your experience with the financial industry, with 401ks, with life insurance, with retirement? What's been your experience? Yeah, I have a 401k through the state. And I think I get a pension, I'm pretty sure. Mm-hmm. But babe, did you ever get a 401k? No, she didn't? Okay, cool. Any IRAs, Roth IRAs, you guys have stuff like that, or you experienced that? No, I mean, we've thought about it, but when I got started with the state, they gave us a 401k, so thought I'd just keep that. Understood. Well, I'll walk you through this piece in terms of what it is that Jermaine's doing. When we get paid, the first place we put our money is where? The bank. Yeah, we put it in the bank. I bank with Chase. Who do you bank with? U.S. Bank. Awesome. We think that our money is safe, but we get a pretty low rate of return. Less than 1%. Yeah. Some of us put money in the stock market. You mentioned 401k. Mm-hmm. Have you guys had much experience with the stock market? I mean, outside of the 401k, no, not really. Little up, little down? What's been your experience? Yeah, I mean, yeah, I'm not too sure. I haven't really tracked it all that much. I put a couple $100 out of my paycheck every month. Sure. And what was the reason you decided on getting a 401k? Just because the state offered it, and it was something for retirement. Yeah. Something to start saving with. Good for you guys. A lot of people never save. They never build a plan and they never save. You guys at least are saving. That's awesome. Yeah. When it comes to the stock market, everybody wants a higher rate of return. They want their money to grow. The downside is there's risk. You can lose money.
Right.
You ever lost money in the market?
I think so.
It's kind of like legalized gambling, right?
Okay.
From 1998 to 2016, this red line is what the U.S. stock market actually did. So this will be a walk down memory lane, but just jog with me here.
Sure.
So this was the dot-com boom. This was AOL, Yahoo, and the dot-com boom. Remember AOL?
Oh, yeah. Yeah.
This was the dot-com bubble, and then this was 9/11.
Oh, wow.
This was the real estate run-up. Remember when everything spiked
Yes.
and grew like crazy?
Yep.
And then this was 08-09 with the crash. Did you or anybody that you know and love lose any money or have a tough time in 08-09?
Yeah, my dad, for sure.
What happened?
He had properties in Texas. He had apartments.
Wow.
And it didn't go very well during that time.
Lost money.
Yeah.
Tough
lost
time.
a lot of money.
Yep. A lot of people did that. Imagine how different it would have been if we learned about money, how to play and win the money game.
Yeah.
Well, the economy was flat for a couple years, and then it took off like a rocket. Here in 2019, as of today, we're here in July, the market's the highest it's ever been in history.
Wow.
The market's the highest it's ever been. And you know as well as I do that whatever goes up must what?
Come down.
So a lot of people are looking at the market today saying we've had 9 years, almost 10 years of growth. This is phenomenal, but you can't just keep going up forever. And there's a lot of things where people are getting nervous because they know it's going to have a correction. They know it's going to have to come down at some point. And do you want to lose your hard-earned money?
No.
Do you think anybody else does?
No, absolutely not.
But do you think we learn how to protect it?
No.
Would you agree with me that the wealthy in America do things pretty differently with their money?
Oh, of course.
How powerful would it be if we in middle America learned what the wealthy know about how they save, protect, and grow their money? How different would our lives be?
Probably pretty different.
That's exactly what Jermaine's doing.
Wow.
He's sitting down with people, teaching them what the wealthy have done for decades, and it's stuff that we've simply never heard about. Right? So when someone says, well, how come I've never heard of this? Well, do you have $9 million? No. Okay, that's why you've never heard about it, right? So let me show you one of the things that the wealthy do. May I show you?
Yes.
They leverage major insurance companies. They leverage major insurance companies because those major insurance companies give them guarantees. When you put your money in the bank, you expect it to be safe, right?
Absolutely.
When you put your money with an insurance company, there's guarantees that you'll never lose money.
Okay.
When the stock market grows, the insurance companies credit the client most of the growth. Most, not all. So not all the growth, but most of it.
Okay.
And the reason I say most is because they give the client maybe 60 to 80% of the growth.
Okay.
It depends on the product and the company, but they give them most, not all. And hold on one second, we'll edit this part out.
Dude, by the way, this is phenomenal. I'm so glad I'm doing it because it's like reigniting the fire in me, 100%. Like, the whole thing with my dad, it's like I totally forgot about it, but it was in there. It's awesome. Left off on stock market, most of the growth.
But when the stock market grows, the insurance company gives the client, let's call it most of the growth. Not all of it, but most. If anybody says you can get all of the growth and none of the risk, run the other way, because they'll be in jail with Bernie Madoff in the next couple of years.
Okay.
You don't get all the growth, you get most of it, right? But then when the stock market drops, you're protected from loss.
Oh, okay.
The last advantage are tax advantages. Depending on how you structure the account, you're able to access the money on the back end, potentially income tax free.
Wow.
So let me show you how this works.
Okay.
When the stock market grows, this kind of account with an insurance company gets most of the growth. Not all of it, but most of it. But when the stock market drops, what happens to the wealthy's money in the insurance account?
It stays flat?
Just stays flat. They don't lose. When the stock market rebounds, like Dennis Rodman did back in my day, the market, their money grows. When the market goes up, their money grows. But when the market drops, they don't lose.
Wow.
And if you structure it properly on the back end, you may be able to access your money income tax free. Whereas in a 401k or an IRA, you're going to give Uncle Sam probably 20 to 30% of your account balance just in taxes.
Wow.
So being able to help somebody grow their money, not lose their money, not pay as much in taxes, and have liquidity, these are the major things Jermaine's going to help somebody with in a retirement plan.
Wow.
If you want to go access your money in a 401k before 59 and a half, you're probably going to pay penalties, fees, taxes, things like this.
Wow.
But some of the accounts that he represents, you'll be able to go into that account in your 40s, in your 50s, if you structure it properly, and access that money income tax free, no penalties.
That's powerful.
So being able to give families greater liquidity, being able to get them growth, protect their money, this is some of the major stuff Jermaine's doing. Does that kind of make sense?
Yeah.
How powerful is that?
Extremely powerful.
Had you ever seen this before?
No.
Let me ask you a question. If you were to pick what color you wanted to invest your hard-earned money into, which color would you pick for your family?
Green line.
But before today, you didn't know about it.
No.
So without Jermaine talking to you, how would you have ever found out about it?
I don't think we ever would have.
You think probably a lot of people in that same spot?
Yeah.
Let me ask you this question. If you were to show just this picture to 10 people, how many of them you think would want to move their savings to the green line?
Probably 10.
Absolutely. Let's just be conservative and say that it's 7. Let's say that 3 people have their heads stuck in the sand and they're going to do the same thing they've always done because they're just that way. They're old school. They're never going to change, even if it's better. They'll kill themselves doing the things the wrong way.
Wow.
If 7 out of 10 did this, imagine what our communities would look like with more savings, more life insurance, more protections, more access. Be a game changer.
Absolutely.
If one of these paid our average agent $500 to $1,000 to help a client, and they helped 7 of those a month, and they made an extra $3,500 to $7,000 a month, how valuable would it be to have that money inside of our pockets in our community, an extra $3,000 to $7,000 a month?
Extremely valuable.
That's exactly what Jermaine's doing.
Wow.
Now, you mentioned you had money in the 401k.
Mm-hmm.
If I were to show you a way to take that money you're currently saving into the Magic Mountain and possibly move some of it into the green line, is that something you'd see being valuable for you?
100%.
I'll show you how to do that piece. This is the main thrust of what he's doing. Do you have any other questions on this piece before I move on?
I mean, I guess, how does the green line work, or how does that work?
Well, the insurance companies, when the stock market grows, they grow your money. But when the stock market drops, they protect your money.
Okay.
Insurance companies are in the business of insuring things.
Right.
So they can kind of make sure that you don't lose stuff.
Right.
Right?
Okay.
Now, there's always pros and cons.
Sure.
Sometimes people say, oh, well, this sounds too good to be true. It would be too good to be true if you got all the growth and none of the risk.
Right. Okay.
But you don't. You get most of the growth.
Yes.
And none of the risk.
Okay.
Make
cool.
sense?
Yeah.
Cool. Well, let me show you the second piece of what it is that we do. And here we go. So our company name is PHP, People Helping People.
Okay.
We're not an insurance company. We're an insurance agency. We represent major insurance and financial companies that you've heard of. You've heard of companies like Lincoln, Mutual of Omaha, John Hancock, AIG.
Yes, absolutely.
We represent them and about 20 or 30 others.
Okay.
So when Jermaine sits down with somebody, he's not in the position where he's trying to sell them his company's product.
Right.
Like a State Farm, Farmers Allstate, New York Life, Primerica.
Okay.
Instead of trying to push his company's product, he's trying to help build someone a plan. See, a lot of us save, but we don't plan. Meaning, we get offered a 401k or we get offered a savings vehicle, and we just say, well, I could afford to save $100 a paycheck, $200 a paycheck. So we start saving, but we never actually start at the end and say, when I retire, how much money do I need? And then work backwards to figure out how much do I need to save to get there. We don't plan, we just save.
Wow.
But we want to help people be able to build a plan so they can actually have the retirement that they want. That's the retirement piece of it. On the life insurance side, protecting your assets is super important as well. Being able to protect your family and things like that. So these major insurance companies, they have products that do both.
Okay.
They help people save for their retirement and protect their family and protect their assets.
Wow. Okay, cool.
Our company, a little bit of us, we got started about 9 years ago in an office in LA with just 60 agents. And when we got started, we said, we want to go save America. And for us, here's what that meant. We wanted to change the way the game is played for middle American families to get access to learn what the wealthy have known about money for decades. And we thought, man, if we could go help more middle American families learn this stuff, we could move the needle in terms of us being able to get ahead and not getting left behind. At the same time, it's not enough for people just to learn how to save the little bit that they have. People need to go make more money. Is the cost of living going up or down?
Up.
And is the increase in your income at your job going up just as fast as the cost of living?
No.
So at some point, people are just going to run out of gas when it comes to making money. They've got to go learn how to make more money. And we're passionate about teaching business and entrepreneurship because entrepreneurship is the vehicle that will allow someone to scale their income. When you think about the wealthiest person you know, are they, employees or they run a business?
Oh, they run a business, hands down.
So what makes us think we're going to become financially free working for somebody? But school never teaches us how to run a business.
Yeah.
So a lot of times when people are thinking, man, I want to do something different, make more money, they don't know where to go. We introduce them to this industry. Something interesting that's going on is there used to be 500,000 licensed agents in this industry. And there were 200 million Americans. This was back in the 70s. But since then, our population has jumped up to 300 to 350 million people. But our industry has dropped from 500,000 down to 150,000 people. So we've lost 65% of the people who do what we do. Meanwhile, there's more people who need what we have. And so what our company did is we said, we're going to create a training platform for people with no experience to be able to get into this industry, one of the highest paying industries in the world, be able to go service families with really well-needed accounts and services like you just saw, help get those into the hands of middle American families.
Wow.
Right? And, supply and demand is in our favor. If you can be in a place of low competition, high demand, you make a lot of
money.
You make a lot of money. And I'll show you that piece. In terms of these companies, there's a variety of different things that Jermaine is going to be licensed to help families with. I'll run through them here one by one. First one is old 401k rollovers. Do either of you have any companies that you previously used to work at where they gave you a 401k?
No.
And for you either? Sometimes you'll run into people who've changed jobs, and when they do, they have old 401ks or old 403bs that are at their old job. Let me ask you, who do you know, who comes to mind that's maybe changed jobs or changed careers in the last 5-10 years?
My cousin.
Yeah?
For sure.
What does he do?
So I think electrician.
Okay.
He was a carpenter before, and then I think he switched to being an electrician.
No kidding.
Yeah.
Where does he live?
He lives in Modesto.
And what's his name?
John.
Awesome. Jot down John. I'm going to have you refer John to Jermaine afterwards.
Sure.
Who do you know that's a teacher or a nurse that's worked at a school or a hospital, but maybe has changed hospitals or changed schools?
Shelly.
Shelly?
Shelly, our friend Shelly.
Okay.
Yeah.
Jot down Shelly. What does Shelly do now?
So she was a nurse, I think, and then she went to being a school nurse.
Yeah. If you have a 403b or a 401k, it's probably in the red line.
Oh, okay.
If she were able to move her old account from the red line to the green line with no fees, no penalties, how valuable would that information be for her?
Probably extremely.
When you refer over to Jermaine, he's simply going to show her options of being able to do that instead of just letting it ride the market.
Okay, cool.
Kind of cool.
Yeah.
Well, that's one. Next is IRA, Roth IRA. Have you guys ever owned an IRA or Roth IRA?
No, we talked about it, but then we just went with the 401k.
What kept you from pulling the trigger?
We're just thinking about saving in the 401k because work offered it and we were saving it. Didn't really feel like there was a need for two.
Sure. Let me ask you this piece. Do you guys know your fees on your 401k?
No.
Do you know how much it costs to have it?
No idea.
Do you know what the growth is?
Nope.
Do you know what the risk or the loss is?
No.
So let me ask you a question. I'm not throwing stones. Just bear with me for a minute. If I showed up to your house and said, I'm a retirement planner, and I offered you an account where I said, hey, I'm going to put some money in if you put some money in, but I'm not going to tell you the fees, I'm not going to tell you the cost, I'm not going to tell you the risk, I'm not going to tell you the growth, would you sign that?
Absolutely not.
Darn it. I was hoping to pull that off. I'm just kidding. But we all did. It's called a 401k.
Wow.
We all signed that. I always tell people who just show up to their job and sign papers and put their money somewhere, they're my favorite clients because I have a bunch of papers with me today that you can sign without reading, and that would be great, right? I'm just kidding, obviously. But if there were something better than your 401k, wouldn't you want to know about it?
Oh, absolutely.
And if there was something that got you better performance, wouldn't you want to have that?
Yes.
That's exactly what he does, and I'll show you how to do that.
Wow.
You may know people who set up IRAs, Roth IRAs. Jermaine's going to be able to help people set up IRAs and Roth IRAs.
Sure.
When it comes to the life insurance piece, what's your opinion on life insurance? Good, bad, needed, not needed? What do you think?
Definitely good, definitely
Tell me why.
I mean, having kids, it's important, especially being the main breadwinner, that if I were to pass away, that they'd still be able to, maintain their level of living.
And if you were to pass away, God forbid, how would they keep going? Who would be responsible for taking care of them?
My wife.
Okay, got it. Well, in that you feel that way, outside of work, who do you own your life insurance with?
Outside of work, I don't own life insurance.
You don't?
No.
So you and I both believe it's important. We both have families. We want to take care of them. What's been the reason you never pulled the trigger to get that coverage in place, since it's obvious you guys need it?
I mean, we just assumed through work. I guess never really had the conversation, or we talked about it, but we were just okay with it through work.
How much does work give you? 50,000? 100,000?
I think probably 100.
Not sure.
Not sure.
Let me ask you, if you were to pass away, how long would 100 grand last?
Couple months.
Couple months.
Not long, half a year.
Right? Yeah, I mean, we just lost someone in my family, and I can tell you from personal experience, like cremation, even the least expensive, burial, all that stuff, it's like you're putting out $20,000.
Wow.
And if you've got any kind of medical bills or things like that, that eats it up pretty quick. But you look at it, if you were gonna have to replace your income going into the household for 10 years until all the kids became 18 and moved out, if you just put a zero at the end of your income every year, imagine how much life insurance you actually need.
Wow.
It's kind of a different story.
Very different.
So our jobs don't give us enough insurance to actually ensure that our family is protected. And at the same time, if we leave our job, if we get fired or we quit, we can't take that with us.
Right.
And so later on, when you're no longer working there, but you still need insurance, maybe you're uninsurable, maybe you're less healthy, you're older, it's more expensive, it's unaffordable.
Wow.
So a financial planner will tell you it's always good to own private insurance on your own where you control it. Does that make sense?
Mm-hmm.
We'll walk through that piece. In terms of long-term care, have you ever had a family member or a friend that's ever gotten a chronic illness or needed long-term care, needed assisted living, or family members have to help take care of them in their old age?
Yeah.
What was that experience like?
I mean, I wasn't too close with them, but I know it is tough on the family.
Got it.
Is, I mean, it's expensive, and it takes time, energy. There's a lot of stress involved around it.
In California, they say that 70% of individuals over the age of 65 are going to have a chronic illness or a long-term care need.
Wow.
But most of us are completely unprotected and not insured for it.
Yeah.
And so being able to protect a family and protect their retirement in the event of an unexpected medical expense, that's a major piece of what Jermaine does when he does planning for families. It's not just about saving for retirement, it's about protecting the asset of retirement if something unexpected comes up. Lastly here, you look at annuities. Are you familiar with annuities at all?
No.
Have you heard the term?
No, I don't think so.
Okay. Well, you're familiar with pensions?
Yes. Yeah,
Obviously, you have one there with the state.
Mm-hmm.
You know how, like, if you work for a certain number of years, they just give you income for the rest of your life?
Yeah.
If you didn't work for the state, how would you get that benefit of income for life?
Wouldn't.
You wouldn't. An annuity and a pension are fundamentally the same thing.
Really?
So if you work for the state, they give you a pension. If you don't get one. The only way to get a guaranteed income for life is to get an annuity. It's like owning a pension privately on your own that's not done through your company.
Oh, okay.
So people can get the same benefit even if their company doesn't offer it, but we're not taught this.
Okay.
How valuable would it be? What kind of peace of mind would you get if you knew that you could never run out of money in retirement?
That's a lot of peace of mind right there.
How much value you think would it be if Jermaine was able to bring that peace of mind to everybody in our community and our family?
It's extremely valuable.
So he's going to help you guys with that, and you can send him referrals for that piece.
Cool.
Lastly is debt settlement. Do you know anybody who has credit card debt or student loan debt that they're worried about paying off?
I mean, I know a lot of people have student loan debt.
Yeah.
A lot of people.
1.6 trillion.
Wow. So, I mean, probably all of them.
Yeah, $1.6 trillion of student loan debt. If you know anybody who has student loan debt or credit card debt and they're worried about, what's going to happen with their finances, they can't get ahead to save because their money's going towards bills, that would be a great referral for Jermaine. We work with a law firm, and the law firm actually specializes in debt and debt law. So they can help somebody get out of debt faster. Usually the clients we work with, they get out of credit card debt and student loan debt in 2 to 4 years as opposed to never.
Oh, wow.
So just to summarize, helping people get out of debt, save for retirement, and get the proper life insurance, that's the major thrust of what he's doing in terms of financial literacy and financial fundamentals to help families get ahead. Does that make sense?
Absolutely.
What questions do you have on any of that?
I mean, none. I mean, it's pretty clear.
And it's pretty valuable.
Yeah.
Could you see some places maybe for you where this could be improved for you and your family?
For sure.
That's cool. If you were to pick 2 of these that you think would most overall enhance your family's plan, which 2 are most important to you?
I mean, probably the life insurance and the long-term care.
Has anyone ever sat down with you and calculated your worth to your family?
Never.
Has anyone ever sat down with you and showed you how to calculate the economic value you bring to your family, what your life insurance need is, what you have to replace if you die?
No.
We're going to do that together. So we have this sheet, and this is the Papelito. And we're going to run through to help you calculate exactly what your worth is to your family and how much insurance you need. Kind of crazy, right? Mm. So this is where you can go watch another training video on how to do the Papelito. We're going to speed through it so you can see the end of this piece of how to close the hustle out and how to be able to go collect an application or invite back to the office. So you need $1.2 million of life insurance. You have 100,000. How does it make you feel?
Sobering.
And how do you feel about that, Mary? He needs 1.2 and he's got 100,000. Does that give you peace of mind or does that make you nervous? Well, in terms of life insurance, let me ask you, has anyone ever showed you the different types of life insurance that exist?
No, no one.
Let me show you.
Sure.
There's 3 different types of insurance. The first kind is term. They call it term because it lasts for a certain term, a certain length of time. I'll give you an example. This woman is 34 years old. She gets a $500,000 life insurance policy, and it lasts for 30 years. She's 34 years old, so between age 34 and age 64, if she passes away, what do you think her family gets?
The $500,000.
500,000.
Sure.
You got it. But at age 65, what do you think happens to this policy?
It's probably gone.
Everything goes away.
Wow.
She loses the money she put in and the insurance is no longer there. It's not a bad plan, it's a temporary plan, right? It's very cost effective, it's inexpensive because it only lasts for a certain length of time. The downside is it expires. The average policy like this, it usually costs somebody maybe $30, $40 a month if they're that age. The older you are, the less healthy you are, the more expensive it is. But for less than we spend on Starbucks in a week, they get to protect their family for $500,000 every month.
Wow.
Kind of valuable, huh?
Yes.
The next type of policy that exists is called an ROP. Are you familiar with it?
No.
Let's take the same woman, the same age, the same death benefit for the same length of time. Everything else is the same. Except the ROP, instead of it being 30, 40, $50 a month, maybe it's 80 to $100 a month.
Okay.
Here's the difference. At the end of the policy, she gets a phone call. You get a phone call. Ring, ring, ring. Hey, Joe, this is the insurance company. We got great news for you. And you're thinking, oh yeah, what's that? Well, you did your job. You didn't die. Congratulations, you're still alive. You did your job. Here's the reality. You have 2 options. Option number 1, we can either cancel the contract. You no longer have life insurance, but we'll cut you a check and we'll refund you all of the premium you paid in.
Wow.
So if you've paid $20,000, $30,000, $40,000 over the last 25 years into this plan, you get it all back tax-free.
Okay.
You just don't have any insurance anymore. Some people like that. They say, that's great, I can get all my money back. The second option is this. They say, we're going to send you a check in the mail, but you no longer have coverage. And you say, wait. I didn't pay off the house like I planned. The kids didn't move out like we planned. I got sick even though I didn't plan for it. My spouse got sick and I didn't plan for it. Something medical happened. We had to take care of our parents and we went into debt. I didn't plan for that. I still want the insurance. So I say no problem. You get to keep the policy and keep the plan with no cost increase. They can't change your premium. They can't change your rating. You get to keep the same plan that you got when you were in your 30s. You get to keep it for your life until you're 120 years old.
Okay.
How awesome is that?
That's pretty awesome.
So it's a plan that comes with a parachute that you can get out of if you need to and get all your money back.
That's awesome.
These plans, if they were cars, this would be like the Toyota. This would be the BMW. But this one, this is the Ferrari. This is the Ferrari of life insurance. And let me show you how the Ferrari of life insurance works. Everybody wants this plan. It's the Ferrari, but obviously it's more expensive.
Sure.
So some people can't start it right away. No problem. But here's the way it works. You get a death benefit, so if you pass away, your family gets money. However, you also get living benefits. We call this BYOB. Not bring your own beer. Be your own beneficiary.
Wow.
Have you ever had somebody in your family ever get diagnosed with cancer or heart attack or stroke?
Yeah.
Have you ever had somebody with a chronic illness or a long-term care need?
Yeah.
Imagine if they had gotten that diagnosis or that incident had happened and they got a check in the mail from the life insurance company while they're alive for $100,000. How would that $100,000 have changed the game emotionally and financially for the family?
It would have changed everything.
So what Jermaine's able to offer that your State Farm, Farmers Allstate, New York Life, Primerica, and the bank can't offer are life insurance plans that you as the owner can use a large part of your own death benefit while you're alive if something specific medical happens to you. It's called living benefits. So this is life insurance you don't have to die to use.
Wow.
Does that make sense?
Yeah.
How much more value does that provide to a family now that they have a safety net?
Significantly more.
The last piece is it builds cash, so the money that you're putting into the plan, it's growing in the green line.
Okay. Oh, okay.
So who do you do your auto insurance with?
Mercury.
Imagine if Mercury was taking your $100, your $200 of auto insurance money every month. They protected you in your car, but they were also growing that money, compounding it every single year on the side. And at the end, You got your money back plus interest tax-free. How valuable would that be?
Extremely.
Yeah, so the way that life insurance works now is you can actually use it to accumulate cash while also protecting your asset, which is your income earning ability for your family.
Wow.
Now, this plan is more expensive. Usually people are putting in a few $100 a month. Maybe they do this instead of their 401k or in addition to it, but they're putting in $200, $300, $400 a month into a plan like this.
Okay.
But when they do, they're able to get several hundreds of thousands of dollars out if they structure it properly and save over a long enough period of time.
Oh, okay.
So if these were cars, this is the Toyota, this is the BMW, this is the Ferrari. We talked about you needing about 1.3 million of life insurance. Or 1.2. Let me ask you this. In your current budget, how much money would you be willing and able to carve out of your monthly budget to give you the peace of mind of owning 1.2 million of insurance? What would be an affordable budget that you could carve out that wouldn't take food off the table and wouldn't stress you out, but would give you the peace of mind of knowing you're properly insured?
Probably $300 to $500 dollars a month.
Got it.
Yeah.
And in terms of retirement, you said you were saving how much into your 401 every paycheck?
I think it's $300 a paycheck.
Okay. So if there were a way to get you a better insurance plan than you currently have, and a way to maybe reallocate some of your savings into a plan that gave you more flexibility, that's obviously something you guys would be open to looking at.
Absolutely.
What I'm going to do is I'm going to collect some basic information. I'm going to run you a couple quotes so you can kind of get an idea of what it would look like to improve your plan.
Sure.
What's your date of birth? And what's your date of birth? Okay, cool. And let me just give you a couple examples. In terms of these three different types of accounts, which one appeals to you the most? The term, the ROP, or the permanent?
The permanent, for sure.
Okay. Obviously, that's the one that appeals to everybody. If we want to get you 1.3 million of coverage at your current age, we're probably going to have to blend a couple of these different to keep the cost down, but give you the amount of insurance you need.
Okay.
Does it make sense?
Absolutely.
So maybe we take a little bit of term and we blend that in to give you a lot of protection for your income while you're working. But then when you're no longer working and the term is gone, the permanent's there and it lasts forever. So we're going to maybe look at both.
Okay.
So this is where you can go and you can look at other videos about how to do case design, how to do blending. Essentially, you're going to pull out an app and you're going to run them a quote right there for whether it's term or whether it's ROP or permanent or things like that. And if you can collect the app right there because they're open and they want the coverage, fill out the app right there. Better to fill out an app for a term or an ROP and come back to present an IUL than collecting information, leaving, trying to schedule a second. They get busy, the soccer game, the kids, you never get back to it, you never implement anything because that's one more family that didn't get protected. That's one more family that doesn't have the protection that they need. So better to collect it, submit it, and we can always add to it or change it later than waiting to do nothing now and hopefully being able to come back. So John, it looks like we'd be able to get you and or Joe, you and Mary, about $1 million of coverage each if you got each a $750,000 term for the next 30 years with living benefits and a $250,000 permanent plan. And we could do that while staying in your budget of a couple $100 a month for the insurance, and the rest goes into some of the growth accumulation of the permanent policy.
Yeah.
Now, let me ask you this. Did you like the idea of being able to know that if you didn't die, you got all your money back?
Yeah. I think that's, yeah.
If that's something that you felt strongly about, for only an extra $127 a month total, we could upgrade your term to the second plan. And that way you have the same amount of coverage that you need, the $1 million each, but at the end of this one, you at least get all your money back.
Yeah, what if we were to, put that extra 125 into the permanent?
We can do that as well. We keep it with the term, we do the permanent, we just put more money in so there's more growth.
Yeah, I think we want that for sure.
Awesome. Well, have you ever filled out an application for life insurance before?
Never.
Okay, let me show you how that's done. Now you can go watch the video on how to properly close a life insurance application. I'll give you a quick example. Okay, so tonight, here's what we're going to do. I have a couple applications. It's a pretty short form. It's a pretty basic application. I'm going to collect some basic information. I'm not collecting payment tonight. We're collecting your information. We're going to submit this as an application. Okay. The insurance company is going to review it over the next 1 to 3 weeks, and they're going to give you a thumbs up or a thumbs down. Everybody wants this, but a third of people don't qualify for it. So our job is to make sure you guys get qualified. Okay. That's what we're going to be doing. So I'm going to collect your basic information, And like I said, it's not going to draft tonight. You don't cut a check tonight. I'll need to collect a voided check and a driver's license for identification.
Sure.
But in a couple weeks, call it 1, 2, 3 weeks, it's going to get approved. That's when they'll draft your account, and that's when your coverage is in force. And I want to get your coverage in force as soon as possible. God forbid something happens to you guys. Do you feel the same way?
Yeah.
Well, let me ask you this piece. If we were to submit this application and in 2, 3 weeks, that's when they were to draft, would you guys be okay if in 2, 3 weeks this policy drafted and you guys started it? We talked about doing about $400 or $500 a month. If it didn't start tonight, but it started in 2 weeks, is that doable for you?
Oh, absolutely.
Okay. So let me just look at our calendar here together. Today's the 8th. 2 weeks from now is the week of the 22nd through the 31st. If they were to initially draft to put these in place between the 22nd and the 31st, anytime during those 9 days, would you guys be okay with that, or we need to move it?
No, that's perfect.
Okay.
That's perfect.
If we can do that, then I'll just say anytime after the 22nd, they'll draft. Once this gets approved, they usually draft in 24 hours. So I'll let you know, but I'm letting you know now, that's when it'll probably happen.
Okay.
If for some reason it gets held up in underwriting, if there's anything in the background that makes it a little bit slower, are you okay if during the first couple weeks of August it drafts, or do we need to move it to the second half of the month? Some people prefer before the 15th. Some people want after the 15th just because of the way paychecks and bills go. Does it matter to you guys?
Not really.
Okay.
Not really.
Great. Then I'll just put draft on issue and we'll keep you posted there. And that sounds good. Okay, well, do you have a driver's license?
Yes.
Grab your driver's license. If you can grab a voided check as well. If you don't have a voided check, just open up your electronic banking. Just you can look at your checking, your routing and account number, and we'll start here. Okay, I'm going to have you fill out section 1 and 2. Boom. As I'm walking them through that process, once I'm gonna be talking about the training program, I'm walking through the application piece. We collect the application. Once we collect the application, I'm going to say, well, listen, I'm super excited for you guys. Can you see value in what it is that Jermaine's doing?
Oh, 100%.
Pretty cool, right?
Yeah.
Pretty cool. This is awesome. I noticed here on the beneficiaries, you put your sister and your brother.
Yes.
Yeah? Their contact information is correct?
Yes.
Awesome. Here's why I ask. Just because we have a responsibility to make sure your family is protected,
Sure.
What we're going to do is when your policy, as it starts going through underwriting, we want to make sure that your beneficiaries know that they're your beneficiaries.
Okay.
Why do you think that is?
I think in case anything were to happen to us,
Of course.
know, where to go.
If anything were to happen to you, how would they know to contact me to make sure your family gets the money?
I guess they wouldn't.
So we always want to make sure your beneficiaries and your contingent beneficiaries know who we are and have our number on file, because they'll probably hear about something bad happening before we will.
Wow.
So we're going to make sure that piece happens. So if we reach out to them, if you want to text them, just say, hey, my agent's going to reach out to you and introduce themselves.
Yeah.
But if you don't, it's fine. We're just going to call and introduce ourselves and make sure that they know. Okay?
Cool.
That piece there. And then lastly, do you see a lot of value in what it is that Jermaine's doing?
Yes, 100%.
Could you see yourself enjoying learning about more of this for yourselves?
I mean, yeah, probably.
You guys talked about wanting to make an extra $5 to $10,000 a month. Let me just be really direct and ask you, could you see yourselves enjoying teaching people what we guys taught you guys tonight in the last 20, 30 minutes?
I think so.
Okay. Well, let me show you how our training program works. I'd love to invite you back to our office. One of the things that makes us different from a lot of our competitors is we actually invite people back to the office to see our environment, see who it is that we're working with. You can meet the staff and learn more about the company. But we have a classroom training program that's on Wednesday nights at 7 and Saturdays at 10 a.m. A lot of our people are part-time. They have 9-to-5 jobs. They have, full-time kids, family, things like this. But in between, they squeeze in doing something on the side to make more money to get them ahead. If this did end up being a fit, would Wednesday nights at 7 p.m. or Saturdays at 10 a.m., would those be able to fit into your schedule for training?
We can make that work.
Okay. There's a licensing process. Obviously, you have to be licensed to talk about this stuff, which is a good thing.
Yeah.
The licensing process is only a few $100. In the state of California, it's like a $400 to $500 process.
Oh, that's nothing.
It doesn't happen all at once. It breaks up over 2-3 weeks.
Cool.
So for a very simple amount of time and a very minimal investment, someone can go invest into their future to make the kind of money their job won't pay them.
Her licenses were like 20, 30 grand. So
I'm telling you, go to a salon, you spend a lot of time, a lot of money. Ours takes 1 to 2 weeks, $400 or $500. And lastly, there's field training. In the same way that Jermaine is learning hands-on tonight, we teach everything hands-on. We believe that 1 hour of hands-on is worth 10 hours of classroom.
Yeah. And
we want people to be able to grow fast and make money fast. Does that make sense?
Yeah, absolutely.
So I know we're having a couple events coming up. Would you guys be able to clear your schedule here on either this coming Wednesday night at 7 or Saturday at 10 just to come see the office, visit, and meet our people?
I think Saturday morning works.
Saturday 10?
Saturday.
You guys
10.
can be there?
Yeah.
Awesome. I'll have him give you the address here, and look forward to seeing you guys there. You guys are going to have a great time.
Sure.
Awesome.
Look forward to it.
Any questions you guys have for me, or so far so good?
I mean, it's pretty simple. If more questions come up, I'll reach out to Jermaine or you. And
listen, I just want to tell you guys just made one of the best decisions of your life.
Wow.
How does it feel going to bed tonight knowing that your family's properly protected? That if, God forbid, anything were to happen to either of you guys, your family's going to be okay. The family you love, you've taken care of. And if everything goes right, you're going to have a retirement that most people only dream about. How's that feel?
It's exciting.
I'm excited for you. Well, it was great to meet you guys.
Great to meet you.
Have a great night. We'll see you guys on Saturday. All right? Take care, you guys. If you have questions, reach out to your marketing director. Reach out to your director working with you in the office. The biggest thing you can do is watch this, learn the questions, learn the flow, practice, 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 and never be afraid to push. Have a good one, you guys. We'll see you soon.